More and more people are investing their money. They want their money to grow. They dream of financial freedom. Investing in the stock market can be a good way to achieve these goals. One company attracting attention is SoFi Technologies Inc. SoFi is a financial technology company. It's like a traditional bank, but with a modern twist. SoFi offers a variety of financial services. These include personal loans, student loan refinancing, and mortgages. SoFi also has its own investment platform. This makes it easy for individuals to invest in the stock market. Whether you're completely new to investing or have some experience, understanding how to invest in SoFi can be a great addition to your financial journey. The stock market can seem complicated at first glance with its fast-paced trading floors and complex charts, but when you break it down, it's actually pretty straightforward. It's all about buying and selling ownership in companies. We invite you to watch this video till the end. Think of it as a marketplace for companies, similar to a bustling city market where goods are traded. Companies go public to raise money for expansion, research, or other business needs. This process is known as an initial public offering, or IPO. They divide their ownership into small pieces called stocks or shares, which are then sold to investors. Investors buy and sell these stocks, hoping to make a profit as the value of the stocks changes over time. This buying and selling happens on stock exchanges, which are like the marketplaces where these transactions take place. Examples of stock exchanges include the New York Stock Exchange and NASDAQ, both of which are located in the United States. When you buy a stock, you're buying a small piece of ownership in that company, giving you a stake in its future success. The price of a stock goes up when more people want to buy it. This is called demand, and it can be influenced by many factors, including company performance and market trends. Conversely, the price goes down when more people want to sell it. This is called supply, and it can be affected by negative news or poor company performance. Understanding these basic principles is crucial for navigating the stock market and making informed investment decisions. With this knowledge, you can approach the stock market with confidence. SoFi is a leading company in the financial technology sector, often referred to as fintech. SoFi is known for its innovative approach to financial services. It leverages technology to simplify financial products. It aims to make them more accessible to everyone. SoFi's mission is to help its members achieve financial independence. It does this by offering a wide range of services. These include student loan refinancing, personal loans, mortgages, and investing. SoFi's commitment to innovation and customer satisfaction has made it a popular choice. It has attracted millions of members. As a publicly traded company, SoFi allows investors to become part of its growth story. Investing in SoFi means you believe in its potential to revolutionize the financial industry. Your gateway to investing. Setting up a brokerage account. Setting up a brokerage account is a crucial step in your investment journey. It serves as the foundation for all your future trades and investments. To invest in SoFi, you need a brokerage account. This account will act as your gateway to the stock market, allowing you to buy, sell, and hold various financial assets. Think of a brokerage account like a bank account for your investments. Just as you use a bank account to manage your cash, a brokerage account helps you manage your investments. It's where you'll buy and sell stocks. You can also trade other securities like bonds, mutual funds, and ETFs. There are many different brokerage firms available, each offering different features and fees. Some firms may offer lower trading fees, while others provide more robust research tools. Some popular choices include Fidelity, Schwab, and TD Ameritrade. Each of these firms has its own strengths and weaknesses, so it's important to do your research. When choosing a brokerage firm, consider factors such as trading fees, account minimums, and research tools. Some firms may also offer educational resources to help you become a better investor. Opening a brokerage account is typically a simple process. Most firms allow you to complete the entire process online. You can do it online in a matter of minutes. The online forms are straightforward and user-friendly. You'll need to provide some personal information, including your social security number and bank account details. This information is necessary to verify your identity and link your bank account for fund transfers. Once your account is open, you can fund it by transferring money from your bank. This initial deposit will allow you to start making your first investments. Researching SoFi's stock: a deep dive. Before investing in any stock, thorough research is essential. Start by gathering comprehensive information about the company. Look into its financial performance, competitive landscape, and future growth prospects. SoFi's investor relations website is a great place to find this crucial information. Pay close attention to SoFi's earnings reports, which are released quarterly. These reports provide a detailed snapshot of SoFi's financial health. They offer insights into its revenue, expenses, and overall profits. Analyzing earnings reports can be quite complex. Don't hesitate to seek guidance from financial professionals or reputable financial websites. Understanding SoFi's financial performance will help you make more informed investment decisions. Decoding the fluctuations factors influencing SoFi's stock price. Several factors can impact SoFi's stock price. These include economic conditions, interest rates, and competition within the fintech industry. For example, a strong economy can lead to increased consumer spending, which could boost demand for SoFi's services and drive its stock price higher. Conversely, rising interest rates can make it more expensive for SoFi to borrow money. This could potentially lower its profits and put downward pressure on its stock price. Keeping up with news and events related to SoFi and the broader fintech sector is crucial. This will help you understand the factors that might be driving stock price movements. Strategies for success, diversification, and long-term vision. When it comes to investing, diversification is key. It's a fundamental principle that helps investors manage risk and achieve more stable returns over time. Diversification means spreading your money across different investments. This helps reduce risk by not putting all your financial eggs in one basket. By investing in a variety of assets, you can protect yourself from significant losses. If one investment performs poorly, others can cushion the impact. For example, if the stock market takes a downturn, your investments in bonds or real estate might still perform well, balancing out your overall portfolio. Consider investing in a mix of stocks, bonds, and other asset classes. Each type of investment has its own risk and return profile, and combining them can help you achieve a more balanced and resilient portfolio. Don't put all your eggs in one basket, especially when it comes to individual stocks like SoFi. While individual stocks can offer high returns, they also come with higher risks. Investing in the stock market should be a long-term endeavor. It's important to have a long-term vision and not get swayed by short-term market fluctuations. Stock prices can be volatile in the short term, but over the long term, the stock market tends to trend upwards. Historical data shows that despite periodic downturns, the market has consistently grown over the decades. Be patient, stay informed, and focus on your financial goals. Regularly review your investment strategy and make adjustments as needed to stay on track. Investing in SoFi can be a rewarding experience, but it's essential to approach it with a balanced and informed perspective. By diversifying your investments and maintaining a long-term vision, you can navigate the complexities of the market and work towards achieving your financial objectives. This video is for informational purposes only and does not constitute financial advice. Please consult a financial advisor before making investment decisions. See you in the next video.